Siddharth Purohit, Senior Equity Research Analyst Banking at Angel Broking is now joining us. Siddharth, good morning. Can you just tell us for 2017, with the sort of correction that we have seen in NBFC and banks, they essentially now become an overweight?
If you remember, Pankaj, I had been little cautious about the BFSI space and particularly the PSU space for quite some time. And the situation was supposed to improve in the second half of this financial year, but it has rather deteriorated. Now, the stocks have corrected, both the banks as well as NBFC, but there is a reason behind that. The quality of asset, what they had advanced, has deteriorated in the meantime, and also the quantum of growth or the momentum of growth has decelerated to a large extent. Now, if you look at yesterday's financial stability report in what RBI has published also is indicating that the stress level in the entire banking system is not going to go down, either it is rather going to go up in the near term. Maybe in the next 6 months probably we will see that the entire banking system's NPA, which is already gone up from 7.8% in March 2016, it has already reached 9.1% for the entire banking system, and it could hit 9.8%. That's what the RBI is saying, and possibly it will cross maybe 10% plus by next year. So the outlook for the entire sector is really not improving; it is rather deteriorating. The reason behind that, the utilization level of the industry as a whole, for the economy as a whole, has not improved. And a lot of corporates are in a process of deleveraging, so they are not in need of large capital base, rather they are trying to repay some of the debt. So on one part there is a troubled asset going up, on the second part there is loan growth which is not happening, it has been very muted. So the fall in stock prices and maybe corrections is is factoring to some extent, but my sense is that there would be possibly more slowdown in the next couple of more quarters in banking, banking stocks earnings. And based on that, I think that in the near term you may not see much of upside in the BFSI space and banking stocks. But having said that, possibly whatever corrections we saw recently, we may not see sharp price corrections here onwards. It will be more of time corrections going ahead. That's what I believe.
Right. You said the earnings shall be muted. Now, this is largely because of the demonetization impact, or do you see this muted earnings continuing for some time? Because, consumer financing may take some time to come back to normal, because that was the book that was really growing for the banks. The corporate side in any case wasn't growing. Credit growth has been weak even up to September. So will these muted earning growth continue for some time, or is it just going to be a short-term phenomenon?
I think the earnings growth for banks, if you observe last 2 quarters, was already under stress. In fact, for last 2 years itself. And last 2 quarters, large part of the profit that whatever we saw was also contributed by the treasury gains. As we know that G-Sec yield has fallen, and treasury gain has been one of the big positive factor for PSU banks. So assuming that PSU banks tend to book that profit during this quarter and in Q4, so there onwards they won't have much of treasury gains also left on their book. So the core earnings growth, which was already slowing down, if further slows down, then possibly the earnings growth will not look much better in FY18 itself. Now, banks as a whole depend on the 2 things. Either they have to earn interest or they have to earn a fee income, and both depend on the loan growth. Okay, and if loan growth is subdued, say somewhere close to 5-6%, and your cost is going up, then certainly the earnings growth cannot pick up. Now look at a scenario where your deposit growth has been tremendous because of demonetization. In fact, a lot of money has come into the banking system, but there is no corresponding demand for credit in the system. If you observe the last fortnight's data, credit growth has been just 5.5%. And if I just observe in the next 2-3 months, possibly there won't be much of credit demand because of the lack of demand for consumption as well for investment. So maybe if we remain that 5-6% loan growth for FY17, and on top of that because of lower utilization level, maybe the similar range of loan growth for FY18 and cost pressure mounting on banks, then possibly PSU banks will not be in a position to report even decent earnings growth. And on top of that, what I was talking is that as per the financial stability report by RBI yesterday, what it is clearly mentioning that the stress level for the banking system is not going to go away anytime soon, rather it will go up. That means the provisioning requirement will go up in FY18. So possibly what we might see is that another washout year for next year for PSU banks. But only comforting factor is that we have already seen a lot of price corrections happening in those kind of stocks. So maybe there will be more of time correction rather than price correction right now. But on a good part is that the retail side, the retail loan growth had been strong for last couple of years, and that might come back after a couple of quarters, right, which has taken a kind of hit during this 1 month.
What about the NPA situation? While the RBI has given leeway for repayments of loans because of the demonetization impact, if the slowdown is more protracted, if companies aren't going to get their cash coming in, does default rise? Because we were speaking with bankers, asking them, has the NPA cycle bottomed out? They were saying maybe, maybe not. If stress is there, which the RBI is reporting, how long will it take for the NPA cycle to turn, and for how long will it depress the profitability of the banks?
See, the NPA situation, to my view, has really not really got over. The RBI has given some leeway for NPA recognition because of the cash flow mismatch due to demonetization, but that's a temporary measure. For the solution to NPA, there has to be ability on the part of the borrower to pay on a regular basis, and for that the business sentiment has to improve. And if you look at a lot of corporates, the kind of commentary that we are hearing is that not much of corporates are really seeing improvement in their kind of utilization level. So while this extension of payment for this 90 days will help some banks reporting or maybe extending NPA situation for some time, but that could come back, the trouble might come back later on. So my sense is that possibly maybe another 1 year we might take. I mean, I may not be able to give you the exact timeline because the economy itself is going through a transition phase right now post demonetization. But now my sense is that in the absence of credit growth, when your business is not growing and cost mounting and provisioning going up, in the entire situation, banks' profitability is not going to improve in a big way. Only couple of banks which are focused on retail could sail through the difficult situation, and they will be which are again well capitalized, like the private sector banks, like maybe SDFC Bank and ICICI Bank, the leaders in their respective sectors could sail through the difficult phase, who also have a decent retail as well as corporate portfolio. So they could sail through and report decent number in FY18, but that also will not be as expected as earlier because of the slowdown expected in consumption also. Lot of individuals have deferred their consumption and investment requirement for the timing. So there is a pent-up demand, but it will probably come up at a later stage. So it's too early to say that that NPA situation is over. And I sense that
how do you view some of the private banks like Yes Bank and IndusInd Bank? Now HDFC is slightly different. There, a lot of people say the banking system is a little different, but HDFC consistently does plus 20% growth every quarter. IndusInd Bank and Yes Bank also show strong loan growth every quarter. Do you think now there will be a moderation? How would you view these kind of banks? Because even the consumer side is low. For IndusInd and Yes Bank, their corporate book is quite large, and they still manage to give out those loans, and their stress assets are also low. How do you view HDFC Bank, IndusInd Bank, and Yes Bank?
See, SDFC Bank has really done a phenomenal job if you look at many years. I mean, they have been growing on a sustainable way for many years, and they can do it. Obviously, there will be some moderation in the growth that we have reported, like we have seen in many years, because of the demand for retail credit also has gone down to some extent. But looking at the capital base and the ability of the bank in the last many years, I think that maybe that 15-20% kind of growth is something that HDFC Bank can do. And if you just observe, within their corporate portfolio also, they have been largely financing the working capital needs, not the project financing. So as and when business environment improves, then working capital requirement will go up, and HDFC Bank would be in a position to kind of push their credit growth on a better foot. Now coming back to Yes Bank, as you said, Yes Bank has really done a very phenomenal growth, as we know, in last many years, and even in last quarter the growth was much higher than industry, more than 30%. But now the bank might look forward for some moderation in growth, looking at the stress level in the industry and the perceived risk in financing to certain sector. So if you ask me purely from investment point of view, I would go for a bank HDFC, which has already has a tremendous record of outperforming the industry. No doubt the stock has not participated in a big way in rally, but it has not fallen also. Relatively, it remains much insulated. So I would be in favor of buying HDFC. Obviously, Yes Bank also has become much attractive now in terms of valuation. But we would wait for maybe this quarter result, how it is panning out, because of their large exposure to corporate side, and then after that we'll take a call. IndusInd, I don't have a coverage, so I'll not be able to give a comment on that.
Right. One last word on the PSU banks. You don't expect the credit growth to look up. You expect their profits to be under pressure. Then they also are in dire need of capital. Then what happens? Does it come from the government, where the government is stating that they do not want to increase their stake too much? Would we see consolidation, smaller banks being bought by larger banks? What's in store for PSU banks when it comes to capital and consolidation?
See, consolidation has to happen, but it will not happen in a hurry. It will take time. But in the meantime, PSU banks will need capital to meet their day-to-day business growth, and if at all they want to grow. Because see, for a couple of years or maybe in a couple of quarters, banks in general had been struggling for deposit growth, and that was one of the reasons that they were not able to grow business. Now that deposit has come back in the system, but there is not enough capital. So for growing, they need capital, and I don't think PSU banks are looking at their balance sheet health or maybe their financial health. They will be in a position to raise capital from the market. So the only source would be government. So I think purely government has to come forward and infuse capital for growth of PSU banks. But if you ask me what is the outlook for in terms of growth, in terms of business and all, maybe a lot of PSU banks are also dealing with their own NPA issues and their own structural issue. So they are not really looking for big growth in next year itself, bearing very few PSU banks. So from pure earnings perspective, there is not much of growth happening. So if at all there is growth, then accordingly government can fund, and possibly once the cleaning up process is done, then PSU banks might be able to raise capital of their own and look for further growth. But in the near term, the outlook really doesn't look really great for PSU banks. On a relative stand, private banks, even though they will also have tough time going ahead, but they could do much better than PSU. So we'll stick to private banks for the timing, and will not go and buy PSU for the timing.
All right. Thank you so much for speaking with us at NDTV Profit.